You can see here, realized vol falling off a bit of a cliff. These yellow lines all coming down from around 60 to around 40. We were a bit higher on Ethereum. We're about 45 right now. Positive carry returning, which means gamma sellers are being empowered here as a decent spread between where implieds are up here and where realized is. That spread, remember, that is the carry that we're talking about. And the only reason the implieds probably aren't following it lower is because of CPI, thinking there may be some big sort of shifts there. Whether there is or not, we'll find out tomorrow. But, I would expect to see short end vol selling to come into the end of the week as we normally see. Okay. Calendars we still like. We talked about Ethereum calendars last week. Still like that trade. Ethereum's the one that stands out as the flatter curve with the most juice for that front end to come in, and the ETF event is kind of gone. We don't really see it happening. So selling sort of May, middle of June, late May type optionality in Ethereum to earn some premium. We like that against maybe owning some longer dated stuff to kind of protect yourself. So that's the realized vol backdrop. Here you see the curves, as I mentioned, ETH looking much flatter versus a bit steeper contango in Bitcoin. In terms of the moves this week, pretty small moves, plus or minus a vol here or there. We did see a little bit of a weekly pop in Bitcoin up to 54 vol on for this Friday. We're at about 59 vol for Ethereum, but that's pricing in a bit of a move for CPI. Skew wise, we are looking at puts catching a little bit of a bid again in both curves, Bitcoin and Ethereum. But then out to around June, we flip back into calls for Bitcoin, and out to July, we flip into call premium for Ethereum. So pretty similar steepness and pretty similar story going on. It just looks like the skew is telling you of short-term caution versus longer-term optimism. And that's been the story pretty much all year whenever we get these little moves down, and it continues to be that story. Relative value-wise, a little bit of a drift. We got up to like 10 vols in the front end. That's come down about 5 or 6. Well, actually about 7 right here. And then the long end still sitting at around 5. But, longer term, we know if Ethereum starts to move, that the spread can go 10, 20. It's done that before. We do still like this 60 days out, 60 to 90 days out spread at 5. We think is probably quite good value to own, but it's not clear to own it on the upside. Generally, when I do this trade, if I do this trade, I do it as naked calendar switches, naked call switches or put switches. Right now, I don't feel strong enough conviction to do any naked call switches that are going to get me long Ethereum and short Bitcoin. So I'm sitting on the sidelines on this spread right now. I would want to see some better price action out of Ethereum. That Ethereum Bitcoin cross trading better than it is, and then I may consider doing that trade. But right now, I don't think there's a strong enough narrative to really pile into that. Skew-wise, we have seen, as I said, there is a put skew in the short end. Bitcoin 1 month's about neutral. Ethereum, though, is a little bit of a put premium. But as you can see, as we go out to 3 months, they're both in call premium. And if you go even further out to like as long as you can go, then they're in like a deep call premium of about 4 vols. Now, July to September call premium, we think that probably does hold quite well in Ethereum, just because they rolled the ETF dates out to July. And it seems like that ETF approval event is kind of getting rolled. And if it is an event, it's probably a bullish event because the market's not pricing in that an Ethereum ETF is done. So you would have thought owning some upside in July to September in Ethereum isn't a bad part of the surface to park yourself in. And then you can find other things to sell against it, like May at the monies or whatever it is, to earn some premium, basically. So the idea of vol arbitrage is trying to find spots of the curve that are going to trade relatively better than others, buy the stuff that you think is going to hold well, and then fund the time decay and sell parts of fund the time decay by selling options somewhere else, and then ideally sell the stuff that you think can actually come down in implied vol terms as well, which I think the front end of the Ethereum curve is probably quite susceptible to getting whacked by 5 or 10 vol points in the next 2 weeks, basically, right? Into the end of May, if we don't get a big move. That would be my expectation. You can see pretty neutral on the strategy compass on Bitcoin, nothing too exciting, but has it positive carry up to 10 vols, which is in the 65th percentile. Ethereum, 14 vols in the 81st percentile. Again, these are things that are leading me towards saying that front-end Ethereum looks expensive because that carry is so positive as well. flow wise, a massive drop, 35% drop to 5.5 billion in Bitcoin. Now, Vol's been drifting down with that CPI catalyst this week. Block trades have been focused on buying optionality. So obviously there's been selling because nothing's going on. So on screen there's been selling, but the block trades were buyers generally. People buying puts from kind of 60K and down to about 50K. And then on the upside, call buyers chasing like the 65K calls all the way up to like the June 90K calls were trading as well. Although those June 90Ks, to be fair, they may be a sale. I can't see it here. Yeah, that's a call spread. So the June 80K, 90K was a call spread. You see these pink bars here. But other than that, the stuff in the 65 to 70K region was generally buyers of calls. Ethereum flows, you can see we're also down 40% to 3.5 billion, but put flow very much dominating a heavy protection buying in the May 3,000 puts, spending about $2 million of premium and also accumulating things lower down. And there was a put spread collar in June, which is a decent protection trade there. 29-27 put spread versus 34 calls. I did a similar put spread collar myself, which we'll talk about in a bit. But yeah, I think those are good ways to hedge yourself. In terms of gamma positioning, you can see we are getting a bit shorter on Bitcoin and we have got short strikes all over the place. The biggest one being 65K. But I don't think this short gamma position is driving market movement. I don't think it's big enough to really feature. And then Ethereum dealer gamma has been heading towards flat. It was a bit long. It's less long now with all that put buying coming in. If we were to rally back to 3,300, it would get longer again. But these put sales from the dealers have kind of got the positioning a bit more neutral. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.